Right, how's it going, everybody? I hope you're having a great day, but either way, you're at the right place because it's time for another CEO barbecue. And this time I'm going to be in two places at the same time, with that being Chile and Argentina, where I'll be looking for high grade gold and silver deposits together with Brian Miller, the CEO of Astra Exploration. Now, before we dive into the company overview here, though, I'll need you to understand that this program is general and impersonal in nature, with its content being intended for entertainment purposes only. There's a disclaimer on your screen right now. You need to pause the video. There's going to be multiple disclaimers on your screen right now. Pause the video for each one because you need to understand that investing is risky and you could lose all of your money if you don't do more research and if you don't understand the risks involved in investing as a whole. This video should not be considered research, by the way. This video should be considered advertisement because although Astra has not paid for the production of this video, and they have not gotten any questions up front, nor have they gotten any editing rights, just like all other CEO barbecues, albeit paid or unpaid, this should still be considered biased because this channel is a business that sells content creation services to issuers like Astra. And potentially at some point down the road, Astra might actually become a paying client. So again, this is not research. It's an advertisement. The content is biased. And you should visit setterplus.ca to do actual research. With all that out of the way, though, Astra, as the name suggests, is an exploration company listed as ATEPF on the OTCQB in the US, as well as ASTR on the TSX Ventures Exchange in Canada, where an average of about 70,000 shares trade each day. I see a 52-week high of 17 cents and a 52-week low of about 5 cents. There are 84 million shares outstanding, and with today's almost $12 million market cap, that means ASTR is trading at about 14 cents per share. In addition to the 84 million shares outstanding, there are 1.8 million options and 27.3 million warrants, leaving the number of fully diluted shares at a little over 113 million. Management here owns about 15% of the company. That's 15 as in 1-5, while about 52%, so 52%, is owned by strategic investors and funds, including a couple of names that you might recognize, like Michael Gentile and Peter Marone, as well as Mason Resources and Simon Marcotte, who's been on the channel before, and Agentis Capital on top of that as well. That means, though, that the effective float is about a third of those 84 million shares, which is assumed to be in the hands of retail investors. The last officially filed financial statement on Setter Plus, which shows the numbers as of September 30, 2024, didn't have much cash on it to speak of at the time, but since that financial statement has been filed or closed, Astra has raised $2 million with Michael Gentile partly at 6 cents per share with a half 1-year warrant at striking at 10 cents. Total liabilities at the time of the last financial statement sat at virtually nothing, but about $30,000, all of which was current liabilities and specifically accounts payable. In terms of operating expenses, the 6-month period that ended on September 30 this year costed Astra close to $250,000, so that'd be a little less than $250,000 when you count everything. But when you take out the non-cash expenses like share-based compensation, the cost falls to about $35,000 per month on average for the 6-month period, which is notably low, and potentially that might increase as the company ramps up activities, but that's hopefully something we could touch upon later on in the conversation. The largest element of that administrative spends were the various forms of compensation combined, where consulting fees together with management fees as well as professional fees accounted for a little over half of the overall spend. As to exploration and evaluation costs, again, not much has been happening on that front over the last 6 months, and that is also something I hope we can discuss later on. But there is not enough room here for me to provide a meaningful exploration to administration ratio, which it is typically something I do. And as always, finances are a fluid thing. So it is imperative that by the time you're watching or listening to this, you visit the company's website as well as setterplus.ca to look at the most up-to-date numbers yourself and make sure you're getting the full picture. For Astra, part of that full picture is focused on Latin America, in particular Chile and Argentina, as I mentioned earlier. In Chile, the company has 2 projects. That would be the Pampa Paciencia, which is a high-grade gold project in north-central Chile, and Cerro Bayo, which is a bulk tonnage gold target in central Chile. Whereas in Argentina, they have the Maturia project, which is a very high grade precious metals, so gold and silver project located in the southern tip of the country. I'll start with the Argentine project because this is the newest addition to their portfolio where Astra has the option to earn up to 90% of the project. And simply put, the idea here is to find and define a 2 million ounce deposit at very high average grades. There is a 2019 resource estimate on this project. It was conducted at $1,300 gold and $18 silver, so far below what the current prices are, of course, showing a little under 150,000 ounces of gold equivalent contained metal, which about 80% of that equivalent, by the way, was actual gold, with the average gold only grade being 2.6 grams in the indicated category and 1.3 grams in the inferred category. Southern Argentina, we're looking for high grades. That must mean we're looking for epithermal precious metals deposits, and we sure are, with the best results to date varying rather widely as they typically do in these types of systems. But they're wider intercepts of over 20 meters at over 10 grams gold with an over 800 grams silver credit to much higher grades of over 50 grams, so 50 grams per ton gold, and over 3,000, so 3 kilograms per ton silver. That is narrower though, so 2-meter intercept that was. The project is, of course, still early stage, but the company sees a direct analog to Cerro Negro, which are, although the project remains open and undrilled at depth, with the deepest intercepts today being only about 160 meters vertical depth. What exactly is going on here? Where's that comparison coming from? And where the great variability is coming from is hopefully something Brian and I can touch upon later in the conversation. But in the sake of saving time, I'll jump over to Chile, where we'll stop by Pampa Paciencia first. That's where another epithermal discovery awaits, and specifically one that's showing signs of a large potential low sulfidation epithermal system being hidden below the surface here. With the geological comparison Astra is going for on this project is the Faraday mine. Although the veins here are much thicker than those at ferrite. And did I say something else? It is ferrite. I think I said something else, but it is ferrite. Gold and silver are not the only thing Astra is after in Chile, because the Dominator or the Dominador on the Cerro Bayo project is showing hydrothermal tourmaline breccias with porphyry clasts identified at surface, which might indicate porphyry activity at depth, and so showcasing the potential for copper on this asset as well. Hopefully something that, or well, definitely something that Brian and I will touch upon later in the conversation. Cerro Bayo is, again, the other project in Chile. It is a 100% owned asset that's only seen 8 holes over the last 35 years, done by Teck Resources. But the neighborhood in which this is located and the stuff that I told you about at surface does warrant further exploration, especially because there is supposed to be, or this project is supposed to be a high sulfidation epithermal system that's active here. Again, something we'll touch upon later on in the conversation, which, and I've said that 15 times now, and that reminds me that I have been talking for too long at this point. So I'll work towards shutting up now. But Brian, this is your first time on the CEO barbecue, so we'll have to go through the smell test before we actually get into the grilling. Who are you, and why should I trust you with my money?
Fair enough. Appreciate the opportunity to be here, Antonio. And I would commend you very well displayed detail of everything Astra. The only thing I would make the correction of the drilling at Cerro Bayo was not done by Teck. Teck had worked at Dominador, but Cerro Bayo was done previously by Newcrest in the 90s.
That's right.
But otherwise spotless. That was amazing.
Thank you.
So yeah. So who am I and why should you trust me with the money? So a brief background on me. I've been involved in mining in some way, shape, or form since about 2005. My background, my education is not technical. I'm not a geologist. I basically know enough to be dangerous. My formal training is in business finance. But I've worked on several different fronts of exploration, if you would call it that, starting back when I was at university. I grew up on a farm, a very small family farm in rural northern Idaho. And I bring that into the equation or into the conversation because it does shape a lot of my approach to business and life in general. On a small family farm, you learn to become a problem solver at a very early age. But I was able to get work on exploration projects. A good friend of mine was a geologist. So, I could run heavy equipment. I could mechanic. I was an EMT and a firefighter, so I could cross shift with the medic. I just made myself as valuable as I could in as many places as I could. And I found a role as a liaison basically between operations and the corporate accounting office in some of these projects that I worked at. I kept stepping through doors as they opened for opportunities, and I just found myself getting deeper and deeper into the mining industry. It was something I was fascinated with. I always enjoyed the work that I did. And that beginning gave me actually a really well-rounded experience in coming into the CEO role. The company that I was with previously out of Vancouver, I went from kind of a field grunt, if you will, into business development. I took on the VP role of that a year later. A year following that, I took on the CFO role in addition, and we were bought out by Rico Metals in 2017, and which was subsequently acquired by Centerra. And at that point, I knew that I wanted to lead a team, to lead a company, but I wanted to have a hand in shaping the team because I do believe that that is perhaps the most important part of the equation. And I got that opportunity with Astra, co-founded it in 2020 with a few different colleagues. And so we literally built a team around this asset. You mentioned Pampa Paciencia was our first asset in northern Chile. We built the team directly around that. These are people who have both technical and operational experience in Chile. So that was kind of how I got my start. I'll keep it kind of brief, stick to the highlights, and for the sake of time. But to your point, as far as why you should trust me with money. So number one, my team and myself, we are shareholders. We are co-investors with our shareholders. This is a team that has made discoveries before. We have some very, well, I shouldn't say very, I can't say very anymore, younger and talented teammates in the company, but we also have some more experienced and veteran individuals who have been 20, 30, 40 years in the mining industry, who still have great reputations, who are highly sought after and highly regarded. So to summarize, I guess, we do have a solid team who knows what they're doing. They've created value for shareholders before. And I think that we're creating a track record of doing what we say we're going to do. And our shareholders recognize us for that. And that's where you see follow-on repeat investments.
Well, talking about stepping through doors that open for opportunity, as a firefighter, you probably had to step through a lot of doors that were not open at all. So I can imagine that makes things easier. Management ownership, Brian, is recorded at about 15%. You said the team are owners as well. How much of that is you personally? What's your average cost of capital?
Average cost, my average investment cost?
Yeah.
I think, don't quote me on the exact share number. I think I'm around 3.6 or 7 million shares now. So we're talking 4 or 5%, I think. And I believe now my average cost is somewhere around 10 to 12 cents Canadian.
Yeah. Okay. So that is actually close to the current price. What I'm checking here for is founder shares and other stuff that were involved or were the majority of it. How important is this investment to you, though? I mean, these 3.4 million shares that you mentioned, and outside of maybe your primary residence or whatever, what percentage of your portfolio would you say is devoted to Astra?
It's extremely important. In fact, I think a lot of people would say that I'm probably irresponsibly long of the company's stocks. But I do think that, so I think there's two very important considerations when you're talking about skin in the game. How much do people own and what do they pay for it? And that second point often gets omitted, and that's extremely important. But if you'd exclude primary residence, it's we're talking 25, 30% of total assets. So I think by many standards, people would say irresponsibly long, and they say in a junior company, what are you smoking? Well, I think that junior exploration is extraordinarily risky, but it's highly rewarding. I think that you got to have the right people, you got to have the right approach, and you got to have the right eye for the right kind of assets. You also have to have an eye for what the market is going to bear, what the market is interested in. And, sometimes this can be the most lonely seat in the house. But I think it takes some conviction. It takes having experienced a cycle or two to know where you're at and what to expect as far as what's coming. And that has shaped my approach to this. And I think with the people that I have and with some of the assets that we have and the demonstrated potential, I could be upset that, our share price is traded down 57, 50, 60, 70%. Or I can look at this and see where the company is positioned today and what our potential is from this day forward. And that latter point is what I'm really excited about. That's why I own as much as I do.
We'll definitely get to talking about how you plan to unlock that value later on. To your point, what's really important for me in finance is understand your counterparty's incentive. And so with you, are there any other competing incentives like a service company, helicopter company, or a brokerage house, or any other business that you control or own that is currently servicing Astra?
No, none. And I think that that's extremely important as far as what potential conflicts of interest. And you can talk about like other privately owned companies that might be a service provider. I think that tends to be a big one that happens often. I do have a private company, and it simply contracts my services to the company. I don't contract with anybody else. I'm not involved with another company. um, I did I did make a promise to myself when I started this that this was going to be my sole focus. I see too many people getting spread too thin, whether that's um, executive roles in different companies, or another one is directorships in multiple companies. And I've stuck with just Astra. I've stuck with that. And there's been a couple opportunities that have gone by that I look at that in retrospect, and maybe I'm the fool for it, but I do think that long term that's the best thing for Astra shareholders as a whole.
Hmm. I tend to agree. There's few people who can make it work. I know a few who do, but it really is a rarity where people actually do make multiple positions work. Brian, last question of the smell test. Do you or any of the executives or board members here own any royalties on any of the projects personally?
Um, no, Cerobio. Cerobio came to us because of the network and the relationships. Roberto Alarcon is our VP and country manager in Chile. And this property actually came from a company that he is affiliated with. And so they do have a royalty interest on it. Otherwise, no, we don't have any affiliation with any other properties projects in the portfolio.
Okay. Who is it again from that's affiliated with a royalty on the project?
Roberto Alarcon. He's our VP and country manager in Santiago.
Okay, but he's not a board
The
member, I think, or is he?
No, he's not.
Okay. Well, so what I'm looking for here is to see whether the people pulling the strings might have other incentives, where competing incentives, again, if you have a royalty and the royalty is worth more than your shares in the company, that might being the important part, might create competing incentives. But that about concludes the smell test, as I said. So we can now get into the actual barbecue, starting with the case for money, if you will. High level question, but how will you make me money on this if I bought your stock today? What do you have coming up that you think will result in your share price going up, to put it simply?
Yeah. The nearest term catalyst event is likely to be the drill program that we're planning on Manchuria, and we're scheduling that for early 2025. The exact date is still up in the air. We had two things to complete. We had to reconstruct the entire geological model, which we're on track to complete by the end of the month. And then we also had to update the environmental permit, which we expected to be done by the end of the year. And we're still tracking well with that. So we're engaging drill contractors, getting budgets now. We're looking to drill in January, February next year.
Well, the money that you have now that you just raised, so you just have a little over 2 million, or about $2 million right now, probably. Is that going to be enough for you to go out and do that drilling?
Yes, it will.
Okay.
Yeah.
What are you planning? You're probably planning a different news release to kind of outline the drill program, but where do you go? How many meters do you drill? Is that something you can tell me more about now?
Yeah, right now, like I said, we are reconstructing the entire geological model. That was one of the opportunities that we identified with this project, is that previous exploration had misunderstood a lot of important factors there. And so when we do complete that, that will give us a much better sense of where those drill holes are going. But we're targeting about 2,500 meters of drilling with this first program.
Right. You don't know where they're going, as in you don't know what project or what zone you're going to be focusing on.
They will be at the Manchuria project. And as far as which zone, I can't speak to that right now. Like I said, Diego's in the process of building that. But I can speak conceptually toward it, that the main potential that we saw with Manchuria was to identify higher grade or wider feeder zones at depth. Like you mentioned, this project has been shallowly drilled previously, 160 meters below surface. So there's a lot of opportunity at depth. We see evidence of these veins getting wider. We see evidence of grades improving, and there's certain features that we've identified that control those grades. So that's conceptually what we will be targeting.
I definitely want to talk a little bit about Manchuria and where your 2 million ounce target is coming from. So we'll definitely get to that part. At a certain point, though, the burden of having the burden of exploring, so having, but also exploring 3 projects simultaneously, and then more specifically, not just exploring, but doing so efficiently and effectively becomes too large to bear for small cap companies. So would you consider some sort of a strategic deal? It could be an asset level JV or a 19.9 participation, I suppose. And realistically, I suppose everyone would consider them under the right conditions. But realistically, are you at a stage where that can actually become true in 2025?
Yeah, that's a great question. And I say that's a great question because that's one of the things we've been considering, probably more than anything within the company strategically, is yes, you can get too many projects to where both your brain trust and your treasury aren't focused and don't produce the value that they need to. And so what I think, we've got 3 projects now. We stick with what we think is the best one for development for Astra to pursue in-house and potentially JV or consider a strategic investment for the others. So absolutely, that's at the forefront of conversations.
Mm. Is it something that can come at this stage, though? Is 2025 too early to have that kind of a deal? And what is that going to depend on?
I don't think it's too early. I would put the caveat on it is it depends on what the deal looks like. And at the end of the day, it has to do 2 things. It has to allow Astra to focus on where it can generate the most value in-house. And it has to well, and I guess that the second part of that is a component as well. It's got to be structured such that it leaves enough on the table, say in a JV scenario, it leaves enough on the table for Astra shareholders to recognize some residual value for that.
Mm. What is enough? 25, 50%? What would you deem enough?
As much as you can get. And it depends on the stage that you can carry that towards. I think it's rare oftentimes to see 30% or 35% interest on a project that's this early stage. Majors usually come in and they tend to want more of it. They want an avenue to 80 or 100%. So it all depends on how much of the residual interest you can carry as far as ownership, but it also depends on how much value you could potentially get up front. So if you could get a large cash payment up front that say for example, if we could decided to continue to solely focus on Manchuria, if there's a large cash payment that will fund exploration there and we can create value from that, then that might be a consideration. It's all about, and at this stage, most, I think most of what it focuses on is dilution. Kind of stepping away from the question that you asked, one of the most, I would say people most often say the biggest risk in junior exploration is the risk of failing, a technical failure. And I would contend that the greatest risk in junior exploration is the certainty of dilution. And so that's the most important thing to control. And however you can control that best for your existing shareholders, that's the most important consideration.
Hmm. That is a very good point, and it's something that I've been talking or interviewing people on for a while now, and I do agree with that. That is Manchuria, though, that we're talking about. That you say, oh, an asset level dilution, where you, asset level dilution is what it comes down to, where you keep as much of the upside as possible. What about the other 2 projects? How do you look at them right now? Are they just kind of optionality that you have? Would you option them out, or sell them, or spin them out, or do something else with them?
Um, we'd always consider it depending on what the terms are. I'm much more hesitant to do that with Pampa Paciencia just because of the potential that we see there. I would be more inclined to do that with Cerro Bio. That is a terrific target in the Maricunga Belt, but it's much higher elevation. The expense for exploration is much greater. So you're looking at a much higher risk of dilution. Um, so I would favor Cerro Bio as the primary JV candidate. Pampa Paciencia, on the other hand, these are some extremely thick veins. We've hit high grade shoots in 3 areas with our first 2 drill programs. That's got a lot of potential. So depending on what the deal terms are, the near term benefit has got to offset giving up that upside of the project. And I can only speak to the fact that I would entertain it, but it's got to be done on a case by case basis.
I definitely want to talk about Cerro Bio because that's something that interests me. I just kind of like porphyries, and rightfully so, because they can be large and stuff like that. So we'll definitely touch upon it. What about your G&A in the meantime? As I mentioned in the overview, it's been around 35, 36 grand a month over the last 6 months, which is notably low for a public company. Is that going to grow now that you have money and you're going to get more active?
Yeah, that will grow. And that's a great point. It is notably low. That's an anomaly as far as being low with junior companies. And I would say that that primarily was driven over the past year in that management voluntarily agreed to forego wages and salaries
Hmm.
since October of last year. And typically when you see this, they're still accrued and they're still owed. We didn't do that. We let them go entirely. They will not be repaid. And the reason I was able to get my team to do that is because we do own so much of the stock and we do look at the stock as our payday. And we were working on Manchuria for well over a year. We started negotiations on that in June of 2023. We agreed to commercial terms in October of 2023, and we finally got the deal signed in July of this year. So it was a long process. We always had that in the background, and that was one of the main reasons. A project like this that was available and the terms that we got it for, we could see major upside potential in the share price if we were able to secure this, which we did. I think the guys did a phenomenal job.
Hmm. And those paychecks then I assume will now come back now that you're going to be more active. Or are you looking for more staff, geologists, or anything else?
We're currently working with the staff that we have. We do engage other technical personnel on an ad hoc basis, so it's not part of a sustained burn rate. I think that in any situation, you're always obliged to keep the share or to keep the burn rate as low as possible. And so that's what we're focusing on, having provided for, the need of the project first.
Sure. Brian, I want to talk about those assets and all of the assets really that you have been worked before, some of which including large and experienced mining companies, new what you say, Newcrest,
Yes.
Teck as well. How did you put this portfolio together in the first place? To your point, why would they drop it? Why wouldn't they keep it? And how do those assets end up being in your hands?
Hmm. Boy, this can be this could be a very long-winded question. So, only because there are some important factors, I'll try to render that down to something reasonable. I'll start with Paciencia, and we identified this. One of our co-founders, Stuart Smith, used to actually work for Teck, and he was a part of that project when Teck was exploring it for copper. And so, as you mentioned, it's covered in sediments. The veins do not daylight at surface. There's no evidence in most cases. But Stewart was the one that recognized the epithermal potential there when he was exploring for copper. And Teck did some work on this in I believe the window was about 2014 to 2016. And they did some great work there. And the short story was they didn't have the funding to continue with this in their exploration portfolio. If you might recall at the time, look at a stock chart, Teck was trading like they were going out of business in about 2015 and 16. And I actually had another JV with Teck in British Columbia at the company I was previously with during the time. So I know what the circumstances were at Teck with their exploration funds. But their upside was limited. They could earn a maximum of 60% interest at the time. They were having difficulty funding their existing exploration portfolio. And ultimately, at the end of the day, they just had to walk from it.
Hmm.
And they were looking for the copper. The project had never been systematically explored for epithermal. We're the first ones to have done that. B2 Gold and Teck both worked on parts of this project. B2 Gold was searching for copper at the time. They were the ones that drilled the discovery hole at Paciencia. And that was a blind vein that had some high grade gold. But during that time, same situation. They elected to walk from it. The discovery hole basically been made and never followed up. And so we're the first ones to have done that. Cerro Bio, on the other hand, we don't have a lot of detailed information from the Newcrest work that was done there, I think in 1990. There is a porphyry target there. The primary target, we believe, is a high sulfidation epithermal. They did, as you mentioned, 8 shallow drill holes, about 200 meters apiece. They came back with some decent results. But at the time, think about that. This was almost 35 years ago. And so at the time, the thinking may have been that if you have those kinds of grades, we're talking 0.2, 0.4, 0.8 grams of gold, that it's going to be decades before something like that in that country is ever economic. So ultimately, I don't know the exact history of progression, how Don Mario ended up with this project, but what's been notable with the high sulfidation epithermal is Goldfield's project just to the north of Solaris Norte. Spectacular discovery, high grade. I think that's over 4 million ounces now of high grade gold. But we know a lot more now about that style of mineralization in that area. And that teaches us a lot about Cerro Bio that wasn't previously understood. So that's only become a more compelling target in the time that we've owned it. But again, it's high altitude, it's expensive exploration. Moving on to Manchuria, this was originally, I believe, a Barrick project in the early 90s. Barrick drilled, I believe, about 3,000 meters when they had it, which for an epithermal system is not much at all. They walked and largely exited Argentina for some time. It had a couple of other juniors that did some work over the years, and then Patagonia Gold acquired it, and it has been in that company for, I think, the better part of 20 years. What was notable to us is that the current team at Patagonia had never stepped foot on the project, and all the data that they had was legacy data, and nobody was really familiar with it. Diego, our head geo, had been on the project 20 some years prior, and this always stuck in his mind as a project that had exceptional potential. And he had even tried to acquire it prior to his involvement with Astra. So this was always high up on his radar as a project in the Deseado Massif that had very high potential. And sometimes it just pays to be lucky, but timing was right. And we ended up picking up this project for what I think are exceptional commercial terms and no cash payments, no share payments. All of our earn-in is dollars in the ground exploration.
I actually want to kick it off by talking about Dominador. So that's a target that you said Newcrest drilled that one, right?
Teck.
Teck drilled. So okay, now I understand. So Teck is the one that drilled those 8 holes on it, right?
Yes, we're talking Dominador that's near Pampa Paciencia. It's part of the
Yes.
Pampa Paciencia. Yes, that is
Yeah.
correct.
Well, what you found there, or what you know about it, is that it's a hydrothermal tourmaline breccia with porphyry clasts at surface, which again is something I would guess Teck would have seen and would have gotten interested in. Teck, like me, likes porphyries. So what can you do differently at this target to have a better chance at a porphyry than what Teck did?
Yeah, no, Teck did recognize that. And in fact, while we were going through the permitting process at Pampa Paciencia, which took about 15 months, that allowed us to have a look at this copper target because our primary interest is the epithermal system. It's not to say that we have anything against a porphyry copper discovery. That would be a fantastic result, especially besides 2 major operating mines. But it allowed us to focus a little bit. We did some field work at Dominador. Diego had actually just taken a tour of the Sierra Gorda mine a few weeks prior to this, and he recognized that some of the ore they were processing there was this tourmaline breccia that was mineralized with copper. And in the field work that they'd done at Dominador, they had identified a very similar looking tourmaline breccia. It was non-mineralized, but it was high-level tourmaline.
I'm I'm sorry for interrupting, Brian. I'm trying to look for some of the things that Teck had come up with. Is that something? you had access to when planning picking this up or further exploring it?
We had we had a suite of data that came with the project, and some of that include data that was generated by Teck. And so we did have that. But again, our focus being on the epithermal, we knew that there was a copper target, but really that wasn't our focus.
Hmm.
And in fact, Stuart being a co-founder, he worked at Teck. He was well aware of it. And he, told us early, he says, there is also an interesting copper target here too, but it's going to be hard to work on both of them at the same time.
Mhm.
So the data that we have from Teck did some great work, and they recognized the potential there. And uh, to try to boil this down, again, this comes back to kind of the sediment cover and the caliche that is there at the project. You're largely exploring blind, and Teck had identified alteration. They had mapped the same tourmaline breccia that we had, and they drilled these holes. And what they did was that um, they oriented the drill holes. They drilled on this side of the fault and on this side of the fault, or on the tourmaline and the alteration. They mapped the surface, and they tried to cut this tourmaline at depth. And those were kind of blind drill holes. And geophysics, particularly IP, is very difficult to do here because of the caliche. And so what they did was they drilled those holes. They got some anomalous copper and tourmaline breccia intersections in those holes. They then used those holes to put the conductors down to do an IP survey. And that was successful. That generated a chargeability anomaly, a large chargeability anomaly that was just to the east of where they drilled. And they knew they had missed the target. They didn't have the information at the time. And to Stuart's recount, he says that uh, he says, for what it is, this is a really good drill target here. It's high risk because chargeability oftentimes isn't enough. It could be just a pyritic halo, but they did have anomalous copper, and you've got major mines sitting right beside you. He says this is a good drill target that somebody will drill. It just as well be us at some point. So we didn't realize that there was this kind of potential there. But this is a very interesting copper target, especially given the location that it is.
Hmm. But you don't necessarily have immediate plans to follow it up, as far as I understand.
Well, not right now. No, we're faced with right now the same dilemmas about every junior company, and that's even if you got good drill targets, what's the availability of capital and what's the dilution for that? And so as you mentioned, we've got three projects, um, two different drill targets on one project being epithermal and porphyry. Where do you allocate your money?
Hmm. You do have a comparison on I suppose part of Pampa Paciencia, which is you give the comparison to El Peñon, but El Peñon, if I'm not mistaken, did have surface expressions, which you don't. I might be getting that wrong though. So for you, given that it would then be a concealed low sulfidation system, how do you move that forward without having to rely too much on surface data, whereas Alpanian might have relied on surface data?
Yeah, as far as El Peñon, there was very, very little surface expression at El Peñon. In fact, the original discovery was a blind discovery that was covered in sediment and decomposed rocks, just quite similar to Pampa Paciencia. And we know this for certain as I might mention Darcy Marood was led one of the teams that discovered El Peñon. So he was there from discovery through production, knows the asset very well. And so we have an intimate history with the asset as far as that goes. And so we do make that comparison is that there is minimal surface expression with either project. They are both concealed.
Yeah. Well, so how do you deal with that? How do you move forward with them being concealed without you having access to surface data?
It does make it more difficult. Your primary exploration tool is the drill bit. Uh, we have had magnetics that work very well for identifying the veins underneath the cover. In fact, Diego's done a phenomenal job there. We drilled 45 holes. He hit vein in 44 of them. And so we've got the magnetics that work very well for identifying the veins beneath surface. The main challenge that we have right now is identifying where the mineralization is within the veins. That's kind of our big challenge right now. And you want to maximize those drill meters to obviously hit the highest grades as early as you can to minimize dilution and get your
Mm.
enterprise value up.
Would the thesis be here, though, that vein thickness and grade would improve at depth?
That is one of the theses, yes. And we say that because we have seen evidence of the veins increasing in thickness at depth, but we're also higher level in the epithermal system. We're higher elevation in the system, so it does look to be preserved. We see whether that's boiling textures, the geological details that indicate that high level in the system. And the drilling itself has identified areas that do tend to expand thickness at depth.
Hmm. Okay. Yeah, it is an interesting project. I recently spoke to Darcy, by the way, a couple of months ago about his own company that he runs.
Oh yeah.
So interesting. Interesting where this is going to go over time, but again, not your main focus right now. So might as well talk about Argentina here for a second. You're working with a 2 million ounce target here, and you also compare this to Cerro Negro, despite it being rather early stage. So where is all that coming from, and where's your confidence really in the deposit growing so much coming from?
Yeah. So to clarify, I think our website, we have 2 million ounce target, or greater than 2 million ounces, what it reads. And I think that comes from the criteria that I gave Diego when I said that, hey, let's go look for another project. Right now is the time to acquire something. It's got to have multi-million ounce potential. It's got to have high grade, and try to find me something with an existing resource. Those were the three criteria. And this is what he came up with. And so it's to have the potential for, multi-million, that's greater than 2 million is where that comes from. And the comparison with Cerro Negro is directly from Diego's experience at Cerro Negro. Diego is a field explorationist. He's also a professor at La Plata University. So he's very well tied in with the scientific and research community. And one thing that's interesting about that is he's had access to a lot of projects that many geologists wouldn't. Cerro Negro was one of those. Diego was actually there doing some research work at Cerro Negro when the Eureka discovery was made. And that was the game changer at Cerro Negro. So he was very aware of what happened, the progression at Cerro Negro. He was very aware of the mineralization style, the deposit style, and everything that had transpired up to that. And one of the things that Diego tells me, he says, they had the same focus at Cerro Negro. They had this kind of a crummy resource near surface that was these super high grade parallel thin veinlets that came together for a bulk tonnage resource. But everybody was kind of looking for the holy grail, and that was, where did those grades come from? What is feeding the system? And so that was when I believe that was Andean Resources that made that discovery at Eureka, and that was drilling the main feeder zone underneath the volcanics. And then pretty soon they found another parallel vein and another parallel vein. Of course, the rest is history. And Diego likes, in his early stage, Diego likes Manchuria as an analog to Cerro Negro because of the location that's in the Deseado Massif, the type of mineralization, the deposit style, and the similarities as far as the evolution of things. He sees what he recalls as very similar episodes, having these thin veinlets at surface, super high grade, lots of them. You can put together a bulk tonnage resource. But where's the big nut? Where's the big prize? And that's the opportunity that he sees at Manchuria.
My concern here was grade variability. The first time I looked at it, how do you follow it up keeping that in mind? Whereas I mentioned at the beginning, sometimes you go from 20-meter intercepts to 2 meters intercepts, but also the grade varies significantly. So grade and width variability, how do you deal with that? And that's typically a challenge in these systems. So you probably have a framework for dealing with them.
Yeah, and it is difficult to say at this point because, as we keep saying, this is earlier stage. And I think that, so a couple of things. One thing we've identified right now is, like I said, we knew that the resource, or that the geologic model was wrong when we first looked at it. And Diego has identified some key factors that are direct controllers of high grade. And one of those are structures that either are or were highly concentrated in organic matter. So you see high carbon areas, and these acted as precipitation zones. And I asked Diego directly, I said, do you see any reference to these these controlling structures in any of the previous information you reviewed. He says none. There was no reference to them. So perhaps one of the most important controlling features of grade was overlooked. And so that's something that we're focusing on right now. I think that's going to be an important thing going forward. And we see that in other deposit types too. I do believe Cerro Moro had similarities to that. They had some carbon-rich zones that were main controllers of grade.
So essentially, goal number one, or maybe not goal number one, but one of the goals of this drill program is to better understand what is controlling the mineralization here.
What is controlling the mineralization and what is controlling structure? Where do these veins get wider? Where do they get thicker and why? We are looking at a number of different host rock units that could be indicators there.
Well, but vein texture also suggests shallow emplacement of the system. But have you hit or modeled any boiling zones already, or are you hoping to find some, model them that in that case?
I think the short answer to that one is going to have to be I don't know. Diego would know. He's the one dealing with the rocks. So I can't speak specifically to boiling zones. I do know that from Diego's and my conversations that he's confident that we are high level in the system. He's confident that there is preserved epithermal precious metals horizons here, and those would indicate boiling zones, or boiling zones are indicative of those at times.
Yeah. Well, I'm only just pretending to know what I'm asking here. So you could have lied to me. I wouldn't have known. Jokes aside, permitting, you mentioned that at the beginning. How's permitting in Argentina now these days? How's that changed since the new president? How are you going to deal with that?
It's so far no surprises. Um, they seem to be much more favorable as far as permitting and fast tracking. There's also a changed investment regime, encouraging investment. Um, I would say so far we found it. We're still on track to get this permitting completed by the end of the year as we initially planned. So we won't know for certain until we know, but I would say that right now the only potential call it slowdown, if you will, is just going to be potentially turnover in government agencies, which we kind of ran into at Chile because that was when we were permitting, that was right amidst government change too. And that added a little bit of time. However, it wasn't a whole lot. So that would be the only thing that I would see as being a potential issue. But otherwise, it seems to be favoring a fast track.
When do you expect to have a permit again?
We're expecting it to be done by the end of this year. So we would look to have the permit by January.
Okay. So essentially a month from now ish.
Yes.
Okay. That's, is that, where's that expectation coming from? I mean, I'm just trying to figure out how realistic that expectation is. Do you have any examples? Have you permitted something before where it took that long, and how do you know?
I would say mainly talking to other operators in Argentina, as well as Diego's community. Again, this guy lives in Buenos Aires. He's a professor there. He knows the Deseado Massif as well, or perhaps better than most people. And that comes from basically Diego's network of direct contacts and communications in government and the mining industry.
Right. What about locals? How's a local population there with you? Happy to have you, or what does it look like?
Yeah, really, it's rather remote. It is road access, but there's no nearby town, so to speak. There's a couple of local farm stays, one of which at or near the project there we have engaged. We've got positive communications and conversations with them. I think that they welcome the idea of work again in the region because it's been some time. So on that front, so far, it all looks very favorable.
Well, it seems like we're going to have a whole lot more to talk about. What in the next couple of months, when you get the permit, you're probably going to have what else you have coming up? The plan for the drill program, I suppose you're going to have coming out in a news release. What else happens in between now and the end of Q1?
Now in Q1, yeah, the we'll probably release when we mobilize the drill rig what the planned drill program is, and if labs are still doing fairly quick turnarounds, we should have ideally we would have some drill results by the time PDAC rolls around. That's kind of our target.
Okay, so early March, you have the first results coming out of the program. Okay, that's interesting. Um, what else, Brian?
And,
Yeah,
I would just remind people that that is our target, and it looks like we are on track for that right now. But and you know that can change. We're hoping it doesn't, because obviously releasing drill results at or around PDAC would be quite a strategic time to do so.
yeah. Well, if you want to make retail investors laugh or cry, you're trying to make plans. That's kind of how it works. Uh, what else, Brian? I think I've been through a lot of the basic questions that I had. I have a better idea of how we're going to follow this up now that I know the story. But what am I forgetting to ask you that you think is important to know about the Astra story?
Um, I think you've covered it all well. I think maybe just a quick summary of, we talk about, um, we talk about investors and investors' perceptions and expectations. And one thing I would speak toward is, we have had some question since we acquired Manchuria, say, well, is this the new shiny thing? And what happened to Paciencia? That was your lead story. And fair enough. That's a very valid question, and very relevant. And the reason that we're focusing on Manchuria at this point is that we believe that this project has the ability to deliver drill results that will create the most value for the fewest dollars spent.
Hmm.
We believe that we can, and Paciencia is still there. It's in the wings. It's fully permitted. It's waiting to go. The next step with it is a comprehensive drill program. So it's not impossible to advance two projects at once if that's what we feel is the right thing. But obviously, we're looking to manage dilution best we can. And I think that Manchuria is the best place to do that right now as a next step.
And that's a good note to end the conversation on. I know you have to run now, but I am looking forward to future conversations. And thank you so much for investing your time with me today.
Absolutely. I appreciate the time, Antonio. It was a pleasure.